Hello everyone, Maurice here. Welcome to Tanks Invest, where we're going to be talking about investing, finance, and professional developments. For today's video, it's for 8 purposes only. The investments that we're going to talk about today will be Ethereum and Bitcoin. As you know, I've been getting a lot of coverage recently with respect to my predictions and my technical analysis on Ethereum and Bitcoin. And as of today, I just came back from lunch with my family earlier today, and I saw that today, as of noon in Eastern time period, Bitcoin is down about 10%, and with respect to Ethereum, is currently down about 13% so far. So we're seeing some sort of like a little bit more of a minimal sell-off so far. So I want to quickly hop on the camera here real quick to obviously knowing the fact that people care a lot about this, and I want to make sure that you guys are well taken care of and also informed as to making your investment decisions going forward. So I'm going to go through a technical analysis on both Ethereum and Bitcoin. I'm just going to consolidate two videos together so it makes it easier for everybody to watch. So also going to take a look at the resistance level from here. What is the levels that we should be buying at? What are the level we should be dollar cost averaging at? And my price target for both Ethereum and Bitcoin subsequently for 2021 as well. So stay tuned, stick around, let's make some money. Alright, so quickly going over the technical analysis of both Bitcoin and Ethereum. I'm gonna go through Ethereum first because I think a lot of people care a lot more about Ethereum than Bitcoin based on my observation so far. So just to take a quickly look at the technical analysis real quick, you can see that ever since last couple months so far in February rolled up, we consolidated on a more of an uptrend escalated fashion, and subsequently pumped up the Ethereum all the way up to the $4,383 level because of both the the Coinbase IPO and also with respect to a lot of the positive media affectation that we've been getting so far. Also on top of that, because of just how crazy Bitcoin has been propelling so far, and Ethereum being the secondarily ranked cryptocurrencies, like the silver to the gold or aka Bitcoin, that it also drove up the price for Ethereum. So it because of that seismic effects and that correlation, it pumped up Ethereum actually exponentially higher compared to Bitcoin, which, as you know, not a lot of people can afford one whole Bitcoin, but people can afford Ethereum, so it's a little bit more less cost sensitive in comparison, which subsequently drove up the demand for Ethereum more, and also because of the media affectation at the same time. And ever since then we hit the peak, and on top of that, because of the fact that we've been trending according to plan, growing minimally about like $250 on a day-to-day basis, or about like $500 on a day-to-day basis sometimes, that we were trending according to plan. However, the Coinbase IPO and the macroeconomical affectation pumped up, that made a huge standard deviation to the chart overall. That subsequently rolled up this huge mountain that you see here, and whatever goes really fast comes down really fast, and currently we kind of selling off right now with this major red candle that scared a bunch of people, but at the same time we had this scoop up because we had that one-time resistance level that we formed here back in early May. However, we were so weak that it was formed more of a lower lows that we subsequently sold off even more, and we hit all the way down at one point, the crash that happened a couple of days ago, May 19th, that we got down all the way to about like the $1,800 level, which is a pretty significant sell-off, and we bounced back up. However, because of the fact that we kind of empty shell right now, we didn't have any former or prior resistance level that we have formed in historically. This was just basically like a fluff leverage, if you may. This has no substance in terms of the platform. It just formed because people thought that was like a dip. And this dip was basically correlating with the Bitcoin dip right here, if you take a look at that right here. So that was like the similar timing, and I think that has to do with some sort of like computer trading system that timed it and subsequently correlate the reversal for Ethereum, but it has nothing to do substantively in terms of why it reversed, right? So, and ever since that, we sold off even more, which is exactly what I thought it was going to be, because whatever goes up, we have to go back down, and you have to test that gap. And right now, we still slowly forming that gap and breaching that gap. So the next resistance level, we are going to go back down to somewhere around like the $2,150 level, which we have tested here, which is see that as the first yellow line or the second yellow line, depending on how you want to look at. And once we get there, I think I'm going to start buying more because this was a pretty firm consolidated level that we have formed. And contingent on, the consolidation and how we see the consolidation going forward, do we see more lower lows or do we see more high highs? And on top of that, with respect to the MACD, you could see that right now it's pretty much of a free fall at the moment with respect to how separated are the two lines. They're not really fusing together like the way it was before. So this is a pretty drastic sell-off, and with respect to this drastic sell-off, it shook a lot of people off, and it requires some time for it to recorrect itself, for us to reverse subsequently. So it's gonna go down more based on my what I see in the chart here, despite the RSI being oversold, that we will go back down to the $22,120 level or the $2,100 level that we consolidated sideways, and by that point we will see how that goes. And the likelihood of us like further drop down even more, I would say is more like a 15% likelihood, with 85% of a more upward swing going forward. With respect to the time horizons, I think it's gonna take maybe a week or so for us to get back down there. So I see more bearishness going forward for Ethereum. But again, right, the $2,150 level is the right level to buy into. And with respect to the sell-off that we're seeing right now, I'm speaking at 12%, and I start the videos around like 11%. That this is going to keep falling. I think it's going to fall back down to the $2,150 level and then subsequently consolidate. Okay, so that's Ethereum. So moving on to Bitcoin quickly. So you could see that right now for Bitcoin is comparable. However, we did form that one-time, resistance level, and the resistance level was basically formed correlating with this resistance level that we formed in February. So basically, we're consolidating sideways right now. However, the consolidation is relatively, I would say, stronger compared to Ethereum, because the Ethereum consolidation, as you can see here, this was basically formed once, right? However, if you look at Bitcoin, the consolidation that we had was a little bit stronger, right? We had this one-time peak, and we consolidated sideways from there. We had this like subliminal kind of consolidation that happened as well, sometimes in January. So we had this like some sort of like a 3 peaks so far, 1, 2, 3, and now we have this 4 peaks right now. So this is a little bit more consolidated in terms of like the resistance. So which makes sense, right? Because Bitcoin is a little bit more massive. It's a lot more massive compared to Ethereum in terms of market cap, in terms of like the swings, right? Because it's such a large number we're playing with right now, right? 37,000, not 3,700, right? So the swings and the people that have the control and the manipulations over the fluctuations is a little bit more stable, if you may. I mean, 10% is not really stable, but it's a little bit more stable in comparison to Ethereum, which you saw the crash. Well, it happened by like 45% or even 50%, but for Bitcoin it's about like 25-30%, right? So, and the reason for that is because for that specific reason, right? More corporate buyers with more stability, with and Ethereum has more retail buyers and less and more volatility because of the price point that is offered, and allow for more kind of fluctuations from there. So right now what I see going forward is that because of the fact that we did breach the level of, let me just pull this chart up a little bit. You can see that we were testing the level of like the $3,728 level, the $3,838,000 level here. However, we did breach that, and there is no consolidation that is truly formed consistently. We had this once consolidation, but because of the fact that the consolidation is relatively weak, and with respect to MACD, it is crossing more downward trend, and because of the separation of the two bars, two lines that we see here, and the volume is relatively low, that I foresee us to be going back down a little bit more. And the next resistance level that we need to look out for would be somewhere around here, like the the $33,500 level, which is a pretty strong level for you to buy in. I actually bought in on the crash a couple of days ago. That even though Coinbase did fail me, I wanted to buy in even more at the lower level, but it didn't allow me because I just didn't have access to Coinbase. But I think if we go back to the $33,000 level, I feel pretty good buying in. I don't think that's a bad area to buy in because of the just like such a good consolidation level that we've had. If we breach that, the next level is going to be here at the $30,000 level, which is basically again like a psychological resistance level, right? Which we were testing before the whole pumped up that we got from like the 30K or the 29,500K $1,000 level all the way to the 1.56, right? So that's another level to look out for. So again, right, 33K to 30K, a psychological resistance level. And if we break that again, contingent on seeing more lower lows, right? The reason we saw all of this because we saw this lower low, this downward escalator staircase, right? That subsequently drove this sell off, right? And because of the large gap that we've had. So everything was very logical how it happened and why it happened, right? And again, I'm not a prophet and I'm not a wizard. It's just that the psychology behind the chart makes a lot of sense, right? It's just people becoming more and more bearish, and the gap needs to be filled. And the gap in what it really means is that people made a prompt decision, and it was a combination of a lot of big whales that pumped in, and then quickly a lot of people followed. But when something kind of goes soft, right? The large whale have a strong market power to sell, and once that sell, that drives a huge correlations to a major market sell off, which is what happened. And then subsequently, that's what happened, right? You could see that the big whales, right? You see that one red candle, and subsequently people sold off. The big red candle, people sold off. And again, it's more like the big whale, right? And the whales that I'm talking about are corporations, companies that sold off, right? And I think that could be Tesla, that could be other financial institutions, or that could be, I don't know, a tech company even, right? Who knows, like how are they manipulating or treating their cash balance or their crypto currencies balance in their balance sheet, right? So that's what's really happening psychologically. So next level to look out for again, right, is the 33,000 and then the 30,000. If we break that even further, the next level is going to be somewhere around 24,000. Which, to be honest with you, the likelihood of that to be, I give that more like a 30 to 7, like a 30% likelihood that we will get there, because of the fact that we have formed such a strong base of consolidation, and also on top of that, because we've sold off so significantly from the top already, for us to get even more severe, that would be just a little bit more, not the most logical in terms of like natural course of occurrence. And however, there is a gap that you could see, right? There was no consolidation that happened. It was mostly just green away. That if we test there, why not? I think that will be a pretty sharp crash. I think that will be a flash crash that happened, which you saw that here once. But again, right, the likelihood is low, right? I give that like a 30% likelihood again, right? But however, the testing back at the 33, I would give that like a 70-30 in terms of ratio, and getting out all the way down to the 30 would be, close to around that. And I hope that we get back down there, because then I could buy more of Bitcoin again, right? Last time I bought about half a Bitcoin, and this time I want to maybe buy another half, so I could buy one whole Bitcoin and further dollar cost average. Alright, just to go through the numbers all over again in a more simplistic perspective, I think Ethereum again, right, $2,400, that's okay if you want to buy it now, but just know that we might, have a pretty likelihood of going further down into the low $2,000 level, right? So if you buy in 24, I think that's fine. We are sold off about like 12-13% so far as of the day right now. So if you bought in like $4,000 level, buying at this level wouldn't be too bad, right? Because knowing the fact that we sold off so much already, and we have like some sort of like a slight correction as well, because the technical chart is coming true based on the psychology behind investors. And if we get to more of the true number, with respect to how the technical analysis is going to play out, I think $2,000 level will be a great price for to get in, or like the $2,100. That's totally great. I think I will start buying in at this level again, like I did, on the crash that happened a couple of days ago. And with respect to on the steel level, I think $1,800, that would be just amazing again. But that was a crash that I didn't get in. I couldn't get in because, again, right, Coinbase. Thank you so much for Coinbase, right? And at the 12 months target, I give this a $5,000, and I still stand correct to this based on the technical analysis on how it's going to be trending going forward, contingent on obviously all the macroeconomical affectations that we'll be seeing so far, and how it's going to be trending on a more of an upward trend going forward. That $5,000 with a 108% upside, if you buy now or 2 times your money, wouldn't be surprising to me. And with respect to Bitcoin, I think the $33,000 level would be the first resistance level we need to look out for, which I think that we will get there eventually. And then the psychological resistance will be the 30K. And if we go down even more of the, again, the third wall of the breakage would be the $24,000 level. That if we get there, I'll probably buy two Bitcoins. I know that's a lot of money, but I think in long term wise, this is a steal. Just amazing price point if we could get there. I bought a lot of Bitcoin. I bought like 2 Bitcoin when I was around this area of $21,000 level, and I wish I bought more. So if we get down there again, I would just be so I'll be so happy. And my 12-month price target would be $95,000 with 188% upside if we get there from the $33,000 level with a 3x your money from here. Alright, so that's it for today with respect to my impromptu video on Bitcoin Ethereum with this like mini crash that we're seeing right now. Hopefully you guys find the technical analysis helpful. I just want to really give you guys a peace of mind to make sure that we are trending accordingly. This is not anything that's too crazy or something that is so out of the blue that is not trending according to plan. So hopefully you guys find this helpful. Please, feel free to hit the like button, the subscribe button, also that bell notification as well. Really appreciate it. Love the feedback. Love the questions that I've been getting so far, and love the engagement as well. Stay tuned for the next video, and also have a great weekend for y'all. Thanks.